they are, wanting. I guess the recording actually matters. So the good thing is what I was saying before the recording is garbage. And so now we can get started for real. But we're excited to kind of have a conversation about some of the roadblocks that we are hearing about from a lot of the advisory firms that we're speaking with, the ones that we are connected with in the Planner DAO, to better understand, okay, how can we get started here? There's just some key things that are bogging firms down as they want to get more and more into the space. So that's really the conversation focused on today. But before we really dive in, what I really thought would be helpful is to kind of first, sort of check in with the navigation. So getting an understanding of where we have been and sort of where we're hoping to go. Things have changed significantly since even just a year or two ago, where I did this process with my firm. I know Steve did it with his, where the options are just not that, you didn't have a lot of choices. And so I think it'd be helpful to have a conversation about the perspective and then sort of dive into the things that we are hearing about over and over again about where people are getting sort of bogged down, where they're getting stuck. And then hopefully we'll have some time for some Q&A. As you guys know, I tend to talk a lot, so I'm going to work really, really hard to make sure that we stay on time and leave enough time for questions and answers. And Steve will just interrupt me if I go too long. So really the first sort of conversation, and it's more of a question, to get your thoughts, Steve, on this is, are we there yet? Has the amount of options available for firms to implement digital assets into their practice, have we seen, the evolution of some of that technology? And again, maybe give some context to where we were even just, like I said, a year and a half, 2 years ago in this journey for firms trying to find the tools and the pieces to put this into their practice.
Yeah, it's a good question. So pretty much everything, people try to apply sports analogies to it, and crypto is no different. Surprisingly, though, crypto has gone with a game that doesn't like evolving, which is baseball. So it seems like every time I get a question, somebody wants to ask if we're in the first inning, in the fifth inning, what's going on. So I guess I'll keep it in those terms, because I think the answer is, as far as advisor implementation and the tools to do so in crypto and out in digital assets, the first batter is up in the top of the first inning and has probably seen 1 or 2 pitches so far. We are so early. What we're going to see even in just a year is going to look nothing like what we're seeing now. So are we there yet? Obviously not. But I think the important thing to know is we're not even close. We barely just even begun. So to more specifically answer your question, go back to, what's a year and a half now since we actually got it implemented. Just under it, honestly, and nothing's changed that much. There's been a lot of things announced. There's been a lot of ideas that are being developed, but as an RIA, what I can do a DocuSign and get going in my practice really hasn't evolved that much. We have a handful of portfolio management software companies, portfolio accounting softwares that are helping us implement this stuff. In a year and a half, we've had a couple of Bitcoin futures ETFs released, and that's about it. Other than that, Bitria got bought and changed names 3 times. Height Zero's up and running and added a custodian. On-Ramp's doing their thing, and there hasn't been a lot else. All the other evolution, I think, has been in the SMA side, where just another manager is offering yet another SMA where they can custody your client's assets, et cetera. That's not a market I follow real close, just because I don't particularly care for that model. But there's been more evolution there. So really, it's funny that the rapid change of pace going on in crypto, as usual, as advisors, we see it last, and it gets down to us much later. So I will say things have gotten cleaner. Bitria, their rebalancing, their portfolio rebalancing is pretty clean now. When we first signed up, they weren't deducting fees. We didn't deduct fees for 4 or 5 months after we signed up, and that's a pretty smooth process now. Height Zero linked up with Coinbase. So there's some new features coming, but there hasn't been any major evolution as far as RIAs go.
Yeah, I couldn't agree. I think the fascinating thing is some of the early entrants have started to clean up some of the different pieces of their offering. It's gotten smoother, but it has been a little interesting that we just haven't seen this flood of adoption that I think we have seen in other spaces. So, if you are a firm and you are ready to implement, I would say don't get frustrated with the lack of options, and just continue to stay patient with what is still coming. So I appreciate, I think that perspective is helpful, because it's been a year and a half, which sounds like an eternity in any other space or sector that's tied to technology. But like you said, we just haven't seen it as much. So I would say don't be frustrated by the lack of options and different advancements, because it's still coming. We're at the bottom of that totem pole, so to speak. So getting into some of these typical things that we see with advisory firms, sort of the top 4 roadblocks. The first one that I hear about all the time is literally the overcoming the inertia of just getting your legal docs and the legal piece of this down. So back in my high school nerd days, I absolutely love physics, and I love the idea that like inertia is literally this, something won't change, it won't move until an outside force comes to interact with it. And so this is probably I would say obvious, but this is really where a lot of firms are getting stuck, is right before they even get started. There's this inertia to overcome to get into this space. And it involves legal documents, it involves stuff. And so, Steve, what would you say or recommend for a firm that is just right out of the gate, they're ready to go, and then they instantly get stuck in this mud?
Yeah, I have a couple pieces of advice. The first one, advice that I give out regularly, is you can implement so many of these solutions with personal accounts or friends and family accounts or advisors at your firm to see how everything works. And if you want to go that route, because right now, all of the platform providers are so excited to have new business that they will take you on without minimum commitments and just a couple accounts at a time. And it's not something we can do in the traditional space, right? You can't tell Schwab you're going to move over 20 grand and see how it goes. You're either in or you're out. But we really can do that right now in the crypto space. And so I like to see advisors taking advantage of that. The reason to do that is you can move your accounts, your spouse's accounts, your advisor's accounts. You can open accounts. You probably don't have crypto accounts to move. And you can start using this technology without updating any of your legal documents. You don't need to update your contracts, your ADV. You don't need new compliance processes. You can get in and get moving and see how it goes and get a little bit more comfortable with it before you roll it out to your clients. So that's the first piece of advice. And I see surprisingly few firms doing this. That's what we did right away. I opened an account, funded it, got it going. We started trading. We started messing around while we were working on the legal documents. But eventually you do get to those legal documents, right? So we can walk through a few of those. Obviously everything revolves around the ADV. So eventually this is going to be very difficult because there's so many different ways to do crypto, and there's private exchanges, and there's custodial exchanges, and there's automated market makers, and there's DEXs that are hybrids, and there's liquidity providers, and there's just all these things. And so as we have options across all of these solutions, we're going to need to have different language, different forms, different documents. But right now we're not there. Basically, the way you implement is you contact one of the firms I mentioned before, like a Height Zero, a Vitria, or an on-ramp, and they all operate pretty similarly. So they all use pretty consistent language. So for those of you that have never done compliance, most compliance work is cut and paste from somebody who previously paid for it. So for example, our firm does business at Vitria. We're making a move to Height Zero right now because it's for many reasons, and they're a great platform. And so I just went through our ADV and contract with a fine-tooth comb to see, hey, does it need to be rewritten? Does most of it apply? How does it work? And the reality is that most of it still applies. So most of it works just fine. There's a lot of general disclosures about the risks of crypto. That's more for your ADV. And so here, I guess I'd separate them out into your contract and your ADV. Your ADV's more disclosure language. It has to include a little bit of how to, or this is what we do, but it's more disclosure. So the big 3 pages of here's the risks of crypto, that goes in your ADV. That's more cut and paste. Your contract is more specific. So when you get examined on a client management contract or an investment agreement, basically they say, is it clear to the client what's happening? And you need to read it like you're a client and think, is it clear? So both initially and then for this change over to Height 0, that was the lens to go back through the client management agreement and say, okay, what makes sense here? So the first thing that stuck out is the billing. And obviously, the challenges. The markets are open 24/7. So how do you grab a valuation? How do you do that? And then how are those fees deducted? If you're charging them a monthly fee, if you're a fixed fee advisor charging a monthly fee, then who cares? You don't really do anything different. It's just another product that you're including in that fixed fee. But for these other platforms where you're deducting fees, like you're at a Schwab or something, then you do need to. So, and Height 0 does bill different than Vitria. So that's language that had to go through and be rewritten to reflect their new language for that. But, Justin, as you know, on the RIA consulting side, we have the language for everybody now, to make sure you can plug it in and match whatever system you're doing. And a lot of that was written by me having to make those changes as we explore these other things. So that's a big one. The trading and how it's submitted is a big one. If you're using an SMA or a third-party manager on Vitria, if you're using a good firm like an Arbor Capital, then they're placing those trades and you're using a model, that language is going to look a little bit different than if you have a model portfolio, and maybe even a little different still if you're just doing Bitcoin and ETH. If you say, we offer these 2 things in various tolerances, et cetera. And that's going to be pretty simple versus a portfolio that you got to describe in a little bit more detail. So those are the 2 big documents. We have not found reason to update the form CRS, that most irrelevant of all forms anyway. We went through it pretty close and really didn't see any need to disclose it, make an update for digital assets or anything. So that's remained the same. But at the crux of it really, I think, is the client management agreement. And the big decision tree there is, are we going to include it in our existing agreement, or are we going to have a separate agreement for digital assets?
Well, I think the big takeaway for me, and again, when I went through this, is that the traditional sort of places you go to get those language, they can't help you, right? They don't want to help you, and there is far more resources available from the actual platforms, like you mentioned. And then this is new. This is what Interaxis is trying to help more and more with as well, is to say, because we have now worked with all these different platforms and custodians, we actually have a pretty good handle on the kind of language that does need to go in this ADV. And if this is what you're going to do, then this is sort of the language that needs to accompany it. And so I would say, if you're stuck, and this is, before you even got started on your little road trip here, you are already stuck in the mud. Like that's where to go. Reach out to these platforms and reach out to something like Interaxis Consulting, because we can help mix and match the right language and stuff to help you get past this first phase. And I think you brought up a really good point too. And I was guilty of this. When I got my firm set up with Vitria, the person that was consulting me is, right here next to me, was telling me, you just start with a friends and family, start with your account, start with, a simple rollover. And I didn't do that for several months. And I regret doing it, because you would have just gotten more accustomed to the actual platform, to seeing how it works. It's just like anything. You have to just play with it and get your hands dirty before you reach a comfort level of saying, okay, I can actually now bring client assets into this space too. So I would definitely encourage you. You don't need your ADV language to be, updated for you to do your own, simple IRA, or use your spouse's IRA if you can do that, or just whatever. But that is an easy way to just start seeing how these systems work and start getting a better understanding of how this can fit and help clients.
Justin, let me give a concrete example of something that you discovered during this process. So let me take the share from you here and you can take it back. Do you got the Word doc?
Yes, I see it.
So they're just like a working copy of how I pull any relevant language out of an ADV, slap it all on the canvas, and then go through and start hacking it up and seeing what might not make sense, and then crank it out one at a time. So an example of one thing that comes to mind here that I found during the first round was, okay, we're going to charge our clients a higher fee for digital assets to represent the higher risk, but at the same time, our good clients, we may charge them on the same fee schedule. And then we realized, hey, what if it puts them over a fee tier into a new breakpoint? It's like, oh no, that's something that's something we better make super clear. If they've got $975,000 in Schwab and 50,000 in Bitria, they're going to be over $1 million, but they're not going to get a break on that Schwab money. So we had to make sure we disclosed very clearly that the fees in digital assets do not count towards a breakpoint, because we can't do it. Like, the technology doesn't do that.
Right.
There would have to be a manual process that we were just not willing to implement to track that as we grew and learned about this. So that isn't to say there's a million pitfalls. It's just to say, there are some issues to work through that you will find, and they all have solutions, but they're out there. So hopefully that works as more of a practical example there.
Yeah, no, I again, and to make the point again, it's totally fine to get started with your own and to see, your own experience with these platforms while you're doing that as well. And that was something that, again, I wish I would have done and taken advantage of that time while, hey, I'm sending off a draft of, language to somebody for review. Like, there is downtime there that you can benefit by just playing with the platform a little better. So as we move over this like initial inertia, you're finally, there's movement, there's life. It's small, it's minuscule, it's 2 steps forward, 1 step back. The next hurdle that we often get, questions about is to say, okay, I've now gotten some of these, these documents in order, but my compliance person, or maybe it's your own simple compliance process, and you're in a small firm. How do I show an ongoing due diligence that I sort of get from these other, from a traditional, TradeFi platform, Schwab, Morningstar, all these ratings agencies? There's all this information that you can pull to sort of show due diligence and how you either, pick investment options or keeping up in the space. What would you say to advisors who are trying to say, okay, step one, I got my legal stuff down, and now it's time to sort of get over this, compliance hurdle and get the green light to move forward? What would you recommend advisors need to do, or to pull together to show a compliance officer, or again, to have for your own system as a smaller firm?
Yeah, it's a great question. So I sat in the chief compliance officer seat for over a decade, and I'm sure a lot of people on this webinar have, but the majority haven't. So the majority are just advisors trying to do their job and work with clients and function. And so you're just wondering why compliance is such a pain in the butt. And I think the key to keep in mind here is that when you get examined by the SEC or by the state or by whatever it may be, they don't come in and question. Pardon me, they don't come in and question your investment strategy. They don't say, why so much large cap, right? That's not what they do. They want to know your process. They want to know, do you have a process for determining how much large cap, or determining client suitability, and are you following it? And so it's less saying, hey, you're less defending Bitcoin and ETH and more defending what's the process to decide if somebody should be in a high risk asset, which theoretically is something you should be doing at your firm. Only crypto's such heightened scrutiny that it's a whole nother level that most firms just don't have. So the first thing is just doing the due diligence on why you selected the system that you selected. So at this point, that's going to be a portfolio accounting solution, again, like Height Zero. Why did you select this platform, and what did you do on it? Well, fees were competitive. They give us access. They're multi-custodian, so we had some flexibility for our clients. We felt good that they were compliant. We got the data we needed in order to monitor our client accounts. We feel good about it. Because your firm has to do the same thing on Schwab. It's just everybody uses Schwab, so there's not a lot of risk there. So nobody really puts a lot of time into it. And you take Schwab's language and you cut and paste into your ADV. So we're not quite to that level yet, of course, because these are new, but really it's the same process. So you're going to want to document how you found that platform, why you're using it. So basically your upfront work. Here's why we're doing what we're doing. And that needs to be dropped in a folder, needs to be updated when relevant, but that's first. And then we can go into the ongoing expertise, Justin, but I want to know if you had anything to add into kind of the upfront work there.
No, I think that you hit on it, that this is more about documenting a process that you go through. And like you said, you can highlight things that say, hey, we were comfortable with this platform's, exposure to these different custodians and giving us confidence of best execution of trades and those kinds of things. And that is the starting point for building out this due diligence that says, I looked at these things, I analyzed these things, and I'm comfortable with, Height Zero or Bitria or OnRamp doing what they say they're going to do. But yeah, I think that's the first step, is that, so much of this is a smaller firm. When I am the chief investment officer, marketing officer, and oh, by the way, I also have to be the compliance officer because there's no one else to give that hat to. Sometimes you're getting stuck with, I don't really know what's required. We're a larger firm that's got, already these big processes that they're managing. They have a workflow that they go through that says, this is what we do. It's step 1, 2, 3. And there's a trained person that walks you through that. So when you're smaller, I think that's definitely one of the stumbling blocks, is going, I have to have due diligence. Don't I just use the preferred ETF list on Schwab and that's good enough? Like, someone was already pre-screening these things saying they're appropriate. And that's sort of the lazy solution that advisors often kind of get babied with, is someone else has already, done this work for you and you just sort of tap into it.
Yeah. So that's a great point. So the part 2, then, it's the ongoing expertise. And like so many things, it's only a problem if it's a problem. So I can start trading cattle futures for my clients right now, right? And if it makes money, there'll probably never be a problem, whatever. But if there's a client complaint, or if there's a trade error, or if there's something, then it's going to be, okay, why did you suddenly start trading cattle futures? Where did that come from? What do you know about that? Do you have the expertise to be doing this? And because it's crypto, there's going to be more scrutiny. There's going to be, okay, why are you doing this? And so that's where it really comes into documenting who at the firm can do it and why. So, from the advisor level, in order to back yourself up, that's why we have things like Interaxis Plus that provides this education. But more importantly, things like the CDAA. And part of the reason we do the certification, part of the reason that we started it, part of the reason we push it, of course, is to have that education, have some type of standard for who can and cannot talk about digital assets. Because as good as it is for your clients, it's going to be even better for compliance, and better when an examiner comes in. You can say, well, here's the curriculum, here's the training, here's what I go through, here's what I know. And so that's going to be a really big part of it. And so now put yourselves in the shoes of the chief compliance officer. Like, okay, I get that this is the future, we should start messing around with it, but there's 30 reps here, who gets to do it? Because they have to sit there and justify that, who gets to do it and who doesn't. Well, what Adam and I tell these firms all the time, and now Justin, is, well, whoever's a CDA gets to do it. And obviously, since we're involved in the DAO, where that's obviously that's what we promote, but it's also there for that very reason. It's so a firm can say, yep, you get your CDA, you can start trading digital assets and use this platform. End of story. And then when they come in to get audited, it's very clear. They've got a system, they've got a process, they can defend it, and why they do that. So I think that's a really big thing. But before we even get there, I would go back to where we start a lot of these conversations, which is, how are you going to manage the money? Are you going to have a third-party manager manage it? Are you going to manage a portfolio yourself, or are you just gonna trade ETH, just buy one or two assets and call it good? Because those are all different levels of ongoing expertise you need to document.
Right.
If you jump onto these and just do Bitcoin and ETH, you could make a case that's just an asset class play, and that's just, hey, we have to go get there to get exposure because there's no ETFs or they suck, right? And Grayscale sucks, and I don't want to do it. Like, so you could make a pretty strong case for that. And I would say that's kind of the lowest bar for documenting your ongoing expertise. But once you get up to managing your own portfolio, right? Well, why these 4 tokens? And again, an examiner is not going to say, well, why'd you put Uniswap in there but not Maker? Like that's not gonna happen. You don't have to worry about that. But they're gonna say, what's your process for selecting those 4 tokens? So what we did at my firm is we added onto our investment policy committee meeting, which we do a formal one quarterly, and then we publish some notes monthly. And what that is there for, because what we prefer to do at my firm is we just talk about everything formally all the time throughout the week. But that doesn't help if you get audited. That doesn't help our chief compliance officer. So instead, we have very formal things that we can now we're archiving PDFs and meeting notes and agendas and performance summaries in general. And now it's going to be pretty bulletproof during an audit. And so what we did is roll digital assets into that same process. We rolled in some talking points. We rolled in some metrics on the tokens in the portfolio and the investments in the portfolio. We rolled in some regular resources we get. And a lot of it can just be a manner of saving it in a folder. Just take the email, print as PDF, put it in your IPC folder for that month or that quarter, and you've got something. That way, if you're in there getting harassed by an auditor, it's no, this is what I look at. This is how we do it. Here's what they said, and that's what they're looking for. Their box doesn't say, is the strategy good? It's saying, do they have a system for their strategy? Check, and then you get to move on. And then to wrap this up, Justin, I'll let you clarify anything I'm muddling through here. Then the last one I didn't hit would be on the other side, which is hiring a third-party manager to manage it for you. And I wouldn't say that's the lowest bar, even though you're outsourcing it. That's kind of in the middle. And you're going to need to follow a similar process on that you do when you do the, when you hire a third-party manager for your traditional assets. So the pieces of that, of course, are to get their marketing material, document have a call with them and document, what it is, figure out who their founders are, the portfolio managers, get their bios, save those into a folder, download their ADV, download any, their CRS, any public information. We could live in the real world and know that you're not going to go through every paragraph with a fine-tooth comb.
Right.
But it's not hard to right click and put these in your compliance file. It's not hard at all. And even if you're not the compliance person, if you're an advisor, the compliance person is going to ask you and you're going to have it. And not only is it going to allow you to move forward, most likely, or continue to move forward, it's also going to give you some credibility when you do these things and show that you do your due diligence and archive them in a way that's convenient for the compliance officer. And then Planner DAO, actually, I'm not sure, I think the compliance group announced it, but the compliance group just rolled out something incredible, which is a standardized form for due diligence on third-party managers. Yep. And we've got a plan to kind of get that rolled out and start to get those filled out so they're accessible. It'll take some time, of course, but it's really cool. And there's no reason you can't demand that from somebody who wants to be a third-party manager. Say, look, I just fill out the due diligence form so I know what I'm dealing with, and they will. So that'll be another thing you can document and have in your file, and it'll look more formal than anything anybody has on the traditional side right now. And you'd never use the word bulletproof, but that's certainly the goal, right? That's the reach goal we're getting to.
Right. And at the least, it's something significantly more than, well, they had a really nice email introduction and we had a great, lunch and learn that they, took me to. And just for those of you who don't know, go to the plannerdao.com. It's a community of advisors to join, and they are working on a lot of these public goods to just help fiduciaries in this space continue to, expand the boundaries of digital assets. So check out the Planner DAO, and tap into some of these resources. You hit on a lot of things, and in the interest of time, I think the one thing that I would just reinforce is this is why there is a difference between having a certification that has continuing education and is a serious designation versus I just took this course and it spit out some sort of cute certificate that nobody cares about. I think those are key distinctions that will also go long ways in demonstrating this ongoing compliance, that I am staying current in this space because I have to do these things to keep up with this designation that is serious about this ongoing education. Because again, the space moves too fast. If you took that e-course on Bitcoin 2 years ago, maybe it's still the same because Bitcoin is Bitcoin. But if you've done anything on DeFi or anything else, everything is completely exploded. Layer 1s, 2s, it's all moving so fast. And so just being able to point to a certificate you took a year ago isn't going to speak as loudly as I'm a part of a designation that has these continuing education requirements, and look at all this, education work I still have to do to prove that I know what I'm doing in the space. So for the interest of time, and again, Steve and I we tend to talk too much to each other. We're going to shift gears now from the first side of this, which is far more operational, to the second side, which is about really about clients and client conversations. And one of the things that we've been hearing a lot is that the kinds of conversations that we are having right now in this space all tend to focus on explaining the what, right? Like it goes instantly into the nitty gritty of smart contracts and blockchain and programmable money. And we are just burdened with explaining what this is to a lot of people. And that needs to happen. This is what adoption cycles look like. But as we start to move past that point, I think it's important to zoom out a little bit and recognize that we probably don't do the same thing when it comes to other asset classes. Just as an example, like I don't have to know the intricacies of underwater drilling pressure in order to allocate to an energy position in a portfolio. And oftentimes clients, while this is new and this is intriguing and they do need some of that, I think sometimes what we're hearing is advisors are staying down in this very technical, in the weeds kind of position, and it's actually a standard that we don't do with anything else. Again, I don't have to look at different roof trussing systems to understand an allocation to real estate, right? And that's kind of what we're doing, is we're explaining this because it's new, it's interesting, it's on the news, it's on CNBC, but then we're staying there, and it's causing us to have, I think, almost the wrong kinds of conversations. So in addition to just focusing on the technicals so much, and again, there isn't a question in here yet, but I would say what are the things that you're finding that advisors are focusing on that maybe don't help them have these better conversations with clients? What's maybe get to a more significant conversation that an advisor should have with a client over technicals into maybe something else?
Yeah, I think what we see often is something that advisors do on a regular basis, which is not talk about something that they don't feel like they're an expert in, for fear of looking dumb or looking like they don't have the answers or whatever. And we all did it early in my career. Some advisors continue to do it. It's more of a personality trait than anything, I think. But what if the client asks me something, that I don't know the answer to? Well, if you're gonna deal with crypto, you can just accept right now that's going to happen. There's so much going on. There's so much to know. There's so many headlines that your clients will know about before you get a chance to get caught up on the news, that there will always be something going on that a client knows about that you don't know about. So in a lot of ways, it's intimidating. In a lot of ways, it makes it a lot easier. And so I think the more relevant conversation is the why. And that's something that we did a good job of up front, is really started with, hey, why are we talking about crypto? And the conversation doesn't have to be that hard to come up with, because it's the same reason why you're on this webinar. Like, why do you have interest in it? And that's the same story you need to give your clients. So why, for me, I think this is revolutionary technology that's going to reshape the entire economy and empower people to have custody of their own wealth. And I really feel that. I feel that it's coming. I'm excited to be part of it. But that's what I tell my clients, and it's a different version for advisors than for clients. But say, look, why is that this technology is absolutely going to revolutionize everything in your life, and if not in your life, certainly in your kids' lives. It's going to change most everything. Here's why it matters. It doesn't mean move all your money over. It means you need to start paying attention to what's going on. It's like, you need to know that this is real and this is evolving, and have a little bit of skin, an appropriate amount of skin in the game as it evolves, so you're on top of this. That's the why. And so once I explain that to my clients, the price going up and down is irrelevant. Nobody talked to us about their crypto accounts going down 60%. Like, it doesn't matter, because I didn't say, hey, it's an asset class where we have a chance for big returns. But if it is, tell them the why. Say, look, that can be your why, as long as it's real, which is, look, there's huge return potential. There's nothing else like it I have access to. I think we need to get in on it because it's appropriate for your portfolio. That's great.
Mhm.
You've explained why to be involved, and at least you can defend it and have conversations around it. So just figure out the why. Sorry to sound so business podcasty, right? Start with your why.
Simon
But
Sinek,
little Simon
checks in
Sinek.
the mail. Yeah,
But in this instance, it's more important than anything else I can think of.
yeah,
It's so important to know why, because you can always go back to it.
I
Because then,
agree.
hey, let's go buy some of this. Well, there's nothing really happening on that. That doesn't help us learn anything about the real world and what's going to change. So no, but thanks for the advice.
Yeah, I think that you brought up the two things, that the over reliance on the technicals, and then sort of just focusing as a piece of a portfolio only, sort of misses the opportunity to really connect with a deeper buy-in to what you're doing. And I found it interesting. We have now, whether your clients are young or old, most of them have experienced or witnessed, adoption cycles for either the web or for mobile, mobile phones. And these are very tangible things that people can see and go, okay, yeah, I mean, I really loved, my phone up against the wall, and I didn't understand why I needed to have this thing that was, separate from my car. But you have now watched this adoption cycle take off. You've seen how transformative it has, it's impacted everything. And so if you connect with that why with them, you get a deeper level of buy-in, so that whether you're in a bear market or whether Bitcoin does its usual 50% up, down, any given week, which it can do, you've connected them to this deeper thing of, hey, we're just going to be a part of this. It's actually one of the most unique opportunities to be a part of the evolution of this technology. And look, you can look back and see very recently two different, adoption cycles that have taken place that, again, would you have loved to have been a part of what Amazon was doing in the late 90s? I think most people would agree that, yeah, that's something that, I would love to have in my portfolio in 1995.
Yeah, and the overriding point you're making there is that it should be part of a financial plan or investment plan, and we all have different levels of formality we do that with. But if we had access to legitimate venture capital for non-accredited investors for some of our younger clients, we'd probably be using it as planners on a regular basis.
Yeah.
It doesn't really exist, so we don't. But that's one way you can look at this in a lot of ways. Look, if this person's plan would call for 10% in something, with this risk and reward profile, or 5% or 1 or 20, or doesn't matter, might this be appropriate? Mm-hmm. And that's personally, that's how I kind of look at it for a lot of our clients here, which is, yeah, I mean, we have a lot of clients who are making good income and they're still accumulating wealth, and quite frankly, they could lose 10% of the portfolio or more and be just fine, versus and have it not change anything about their life or their retirement, versus getting something with a giant return on that 10% that would absolutely change their life, as far as transitioning to something else earlier, selling their business, doing whatever they want. And so, not just the risk reward for the asset class, but also the risk reward for the financial plan. You're risking very little to potentially alter their life.
Yeah, absolutely. And that's a good segue into sort of the next thing that we see people kind of struggling with these firms, is that oftentimes they're just not 100% sure of the kind of client that they want, or they just kind of are taking a very hatchet approach to digitally native versus like I think about just how different and unique digital asset people communities really are. So you have maxis, whether they're Bitcoin, Ethereum, that are not going to buy into your diversified portfolio of stable coins and these various things. And then you've got crypto native people who've generated a lot of their wealth here. I mean, those are very different, very unique communities, and oftentimes you're just wanting to connect with somebody, anybody, to get traction. That there isn't a better understanding or philosophy of how am I going to connect this message. We talk about the wrong conversations. These are the conversations I do want to have. And those types of conversations should shape who you want to actually serve. We have seen the development of these very, very specialized niches in the traditional space. I remember famously, it was an article, I think it was probably Keats's, because that's his deal, was like Bass Pro Fisherman, because just being a pro fisherman advisor would be too vague. You have to get down to like the very, very, very minute detail so that you can understand everything that's going on here. Well, digital assets is like 10 times worse, because these areas are expanding so quickly into new things that if you don't have an understanding of who those clients you want to serve, what they are, your message just it gets lost very, very quickly. So help maybe advise and share maybe your own experience about like the kinds of client, or maybe the kinds of conversations you wanted to have, and how that led to the kinds of clients that you wanted to serve.
Yeah, I think it's important when you're talking about this to just address the elephant in the room, which is every advisor is thinking the same thing. How do I roll out cryptocurrency without my current clients thinking I'm insane? And that's what everybody is trying to figure out. I've got clients with a few $1,000,000 that aren't going to know what the hell I'm talking about, and might think I've lost it a little if I suddenly start talking about crypto. And you're trying to balance that with, if I just write a freaking blog post on crypto, I'll probably find 5 or 10 new clients. It may not be ideal, but the phone will start ringing. The modern equivalent of the phone will start ringing, and and so that's the balance that everybody is trying to strike, and it's not easy. The best thing you can do is just be intentional about, just don't be in denial about which strategy you're going for. So
right.
through our experience, what we decided to do is offer crypto to existing clients only, and not give it to anybody who's new to the firm. Don't get offered to anybody we don't know very well or have great relationships with. Not take on crypto only clients. We probably have lost 250 accounts with an average balance of $3,700 by not doing that. But for obvious reasons, it was the right decision. We could have got our numbers of new clients way up if we wanted. But again, that's all risk for basically no reward. So that was a very, very obvious decision I think for most firms. And then we decided we weren't going to advertise publicly as far as offering crypto or anything like that. And what that allowed us to do was go to our good clients, who, even if we screwed it up or quite frankly lost that money, wouldn't really matter. They would be just fine. And roll it out and have those conversations and see how they went, and get this implemented and see what their feedback was, and do it with them as partners and say, look, this is a Wild West. There's gonna be a crazy journey, but it's an important one. We'd like you to join us if you think you're up for it. Yeah. And most everybody said yes. 95% were like, yeah, that I'm in, let's do it. This is cool. And older clients, 50, 60, 70s, the majority of them. So yeah, that's been really interesting. To bring it back more to your conversation, and I guess, Justin, also, this is where we'd love to transition into Q&A, probably where the most natural questions are. So feel free to throw them out there, everybody. But yeah, it's important to just know who you're going after, and then back to what type of client are you going to attract. So if you're already in a fixed fee model, working with younger clients, well, then you don't really have to worry about it. It's a no-brainer. You're probably behind the 8 ball if you're not doing it already anyway. And it's a lot easier. But other than that, you just have to be super intentional. Like if you're going to market, your clients are going to see it. So you got to make a decision. Like, you can talk about it all you want and not market it. You're not going to get as many clients, but you won't alienate your current customers, because they don't read your ADVs. They're not going to be mad if they find out you're doing it. They just don't want to be with a crypto firm necessarily. So there's a lot of variations within there. But I think my overriding point is it's a struggle. It's not really clean unless you're already working with that demographic.
Yeah. My first experience in trying to do this was, my business was predominantly much older, down in Florida. It's like really old. So whatever you think old is, like, tack on another 5 to 7 years. And so in my mind, it was like, okay, I'm not going to convince this sweet 80-year-old lady's, trust fund to do this. So I'm going to go after these crypto native people who, were probably experiencing, some of the boom time. And so they have some crypto native wealth. And the mistakes I made was, I had this traditional sort of, messaging and system and process. that literally didn't match up anywhere with this new thing. And so I was struggling to try to reinvent this whole process and wheel for this very unique client that, you know, is extremely attractive. But it made my business operations very, very, very difficult to try to figure out. And ultimately, similar to you, you know, we just had to basically say, look, we're not set up to do that. You know, other firms, like you were mentioning, if you were already sort of in that demographic, like that's who needs to go help these people. You know, we don't have the infrastructure to go and reinvent our entire process to help these digitally native people who have, they don't have any other assets. And so I think that was a mistake that I remember making. Is I got so excited about going and trying to help these, you know, this new kind of, you know, client, this very exciting thing. But then operationally, I didn't have, you know, the systems in place to really make it happen. And so it's like, okay, am I just going to do this a one-off thing? I mean, I can't scale that, right? Like I can't grow a business reinventing all these processes. And oh, by the way, continuing to service the old, you know, sort of model that, you know, is sort of the foundation for your firm. So yeah, I think that those are the considerations. Again, sort of the operational sticking points that we see. So oftentimes it's just that initial inertia required to get that revolution turning, to really get the momentum going. And then really some of those client facing ones that are just about the conversations that you need to have, getting out of the weeds of the technical. You know, again, we don't have to have, you know, a computer design degree to explain what smart contracts are. So with that, I think this is a good time to, like Steve said, to open up any questions. We tend to talk a lot. I know that this is being recorded, and so if you're watching this later, feel free to email us at Interaxis. We're happy to help answer these questions. It's what I'm focused on doing, is how do we get you past those sticking points to get your firm humming and operating in the digital space.
Yeah, and I think one thing to follow up on the last topic here is, if you're wondering how to roll this out to your clients, how to market to your clients, you want to get that traction. You know, I think the best thing you can do is market that you're open, that your service, right? Your product is a crypto conversation. It's not I can manage these assets, I can buy this token, I can do this. Most advisors know better, but it's that you're ready to have these conversations. It's that people want to know what's going on, and I'm educated and I'm prepared. I'm prepared to talk about why it's important to the world, you know, why it's important to you, why you think it's important to you, and then what to do about that, if anything. It doesn't need to be, hey, let's start moving all your money into crypto. It can be just writing marketing material about, hey, it's time to talk about this, you know, or everybody wants to talk about this, so I'm prepared. There's a lot of different kind of angles you can take into there, just about opening up the conversation to let people know that you're versed in it without necessarily saying, hey, let's go all in on this.
Yeah, I think that's helpful. And especially too, if you really are focusing on that why, then that conversation fits with anybody. You know, it doesn't matter how old they are or what their, you know, sort of retirement plan stage. I mean, that conversation can happen, you know, anywhere. It's not just for some young millennial upstart. It's truly for everyone that you can do that. Feel free, if you have any questions, to use that Q&A feature and pop them in. And like I said, we'll make sure, if you have questions watching the recording, you can just email me, Justin at Interaxis.io. I am the person trying to help a lot of the people who have gone through the education learning Interaxis Plus to really figure out where are these sticking points, how can I make my firm's operations, you know, more efficient, and find the right solutions to implement and make digital assets a part of your practice.
Excellent. Well, hey, thanks everybody. Thanks for joining us today. It was a great webinar. Hope you got some value. Again, I'm also open to follow-ups. Just Steve at Interaxis.io if you want to follow up. That's totally fine as well. Happy to help. This is what we do all day, and a lot of you do that as well. So thanks for joining us.
Yep. Yeah. Thanks so much. You guys have a great rest of your day.
Take care.